Question number 1, illustration number 1. Mr. X, a proprietor engaged in what business? Manufacturing business. Furnishes the following particulars. Opening balance of plant and machinery as on 1st April 24 given. WDV as on 31st March 2024 after reducing depreciation for last year. Meaning that the depreciation for last year is already reduced. And after that, whatever WDV is remaining, no, end of the year, that is given. And that becomes the opening for the current year. Okay. New plant and machinery purchased and put to use on 8th June 24. Before my birthday, on my birthday, or after my birthday? Before 4th October. So it will be greater than 180 days use. Okay. Now this was put to use on 15th December, meaning after my birthday. This will be less than 180 days. Okay. Computer acquired and installed in the office premises. Installed in the office premises after my birthday. Meaning that, will you get normal depreciation on this computer? Yes. The normal will be half because it is put to use for less than 180 days. But additional depre you cannot get. See, on the new plant and machinery is bought now, you will get normal depreciation also, additional depreciation also. Normal depreciation also, additional depreciation also. But on this, normal depreciation you will get, additional depreciation you will not get. Getting my point? See, on this normal depreciation you will get half. On this normal depreciation you will get half. On this also normal depreciation you will get half. But on this you will get full. Getting my point, everyone? Sure. Now what they are saying, please check. Compute the amount of depreciation and additional depreciation if Mr. X has exercised the option of shifting out. Option of shifting out means 115 BAC not followed. Assume that all the assets were purchased by way of account pay check. Do one thing. Highlight this thing. Assume that all the assets were purchased by way of account pay check. Just highlight and keep it as it is. What is the meaning of this? You will come to know after some time when I will be explaining you actual cost. That time this information will be relevant. Okay. Now pay attention. How to solve this question? We are going to compute what? Depreciation. Normal and additional depreciation for previous year 24-25 along with. See, they have not told me to calculate the closing WDV, but still here I will calculate it, because what if they ask you, how will you calculate it? Yes or no? That also we will learn in this question only. Okay. Along with WDV as on 31st March 2025. How many blocks are given in the question? Tell me. One block I already have of plant and machinery. From the last year only, it is coming in this year. And second block will be made for the first time in this year, computer block. So what I'll do, I'll make two blocks. Okay. One is computer depreciable at the rate of 40%, and second one is plant and machinery depreciable at the rate of 15%. Two blocks and particulars. Ready everyone? Do remember the format? Opening plus addition, less deletion. I will just make that format and I will start putting the amounts here. Okay. First I will make the format. First one is opening WDV as on 1st April 2024. In that I will add additions during previous year 24-25 and those additions are put to use during this year for greater than equal to 180 days, less than 180 days, and then I will reduce. So I will now get a balance amount and from there I will less deletions during previous year 24-25. Those deletions I will reduce here. And now I will get the balance. On that balance I will calculate the normal depreciation. But wait, additional depreciation will not be calculated on the balance. Additional depreciation will be calculated on the actual cost, meaning the additions amount. Getting my point? Pay attention. Opening WDV for plant and machinery, it is given 30 lakhs. What should I write in computer? There was no opening. This block is made for the first time. Yes or no? Additions greater than equal to 180 days. How much? 20 lakhs. So 20 lakhs I will write here. Here there are no additions in the computer which are used for 180 days or more. Yes or no? Only one addition in the computer that is used for less than 180 days. So that was 3 lakhs. I will write down 3 lakhs here. And one addition in the plant and machinery also, which was used for less than 180 days, that is 8 lakhs. So can I say now the total is 58 lakhs over here and here it is 3 lakhs. Are there any assets sold from any of the block in this year? No, na? Then dash dash. Okay. Now can I say the depreciable value as on the last day of the year is 58 lakhs and 3 lakhs. On this value only I have to calculate normal depreciation. So normal depreciation will be calculated on this amount. Now normal depreciation will be reduced out of this to get what? The closing WDV. Yes or no? So what I'll do? I will reduce the normal depreciation. So normal depreciation on what? On 8 lakhs out of 58 on 8 lakhs. Out of 58 on 8 lakhs, the normal depreciation will be at the rate of 15% into 1/2. And on the balance 50 lakhs, out of 58, on the balance 50 lakhs, it will be 15%. Are you all getting it, everyone? And on the 3 lakhs, computer, entire 3 lakhs, I will calculate at 40% into 1/2. Everyone understood this? So now the calculation part. 8 lakh into 15%. divided by 2 will give me 60,000. So here I'll write 60,000. Okay, it will be dash. 50 lakh into 15%, it will be 7,50,000. Here I'll write 7,50,000. Here dash. Now here it will be dash. 3 lakh into 20%, it will be 60,000. Got it, everyone? So this will be my normal depreciation. Now along with the normal depreciation, I will get the additional depreciation on new plant and machinery, because the business is manufacturing business. Yes or no? And I will say less additional depreciation on what? On 8 lakhs. It is a actual cost of new plant and machinery acquired during this year. But on this, I cannot claim the entire 20%. On this, I will claim only 10%. 20% into 1 by 2. And on the balance 20 lakhs. Sir, why not 50? 50 was the purchased in this year. 20 lakhs. Okay, actual cost of that only will be allowed as depreciation. Additional depreciation on that actual cost will be allowed at full 20% rate, because this was put to use for 180 days or more. So 8 lakh into 10% will be 80,000. Here it will be dash, and 20 lakh into 20% will give me 4 lakhs. Here it will be dash. So now from 58 lakhs, I will reduce 60,000. I will reduce 7,50,000 minus 80,000 minus 4 lakh. I will get 45 lakh 10,000. This is the closing WDV as on 31st March 2025. And this will become opening in the next year. After reducing depreciation for this year, whatever remains will become opening in the next year. Yes or no? And from 3 lakh, if I'll reduce 60, I'll get 2 lakh 40. See, if they would have told you to calculate the closing WDV for this year, you would have calculated in this manner. But in the question, they are not telling you to calculate this. In the question, they are telling you to calculate the amount of normal depreciation and amount of additional depreciation. So what you are going to do here, normal depreciation is equal to 60,000 plus 7,50,000 plus 60,000. This is your normal depre. 60 plus 750 plus 60. 8,70,000. This is your normal depre. And what is your additional depre? Additional depreciation is 80,000 plus 4 lakhs. That will give you 4,80,000. If you get these two answers no, only then you will be getting the marks in the exam. Did you get, everyone? Normal depre is 8,70,000 and additional depre is 4,80,000. Please check the answer. Same or different? Different, no? Same. This was your question number 1. You got the same answer, no? But by the way, perfect. Very good. Now let's go to the question number 2. They have added both the depreciation, normal, additional together. Wow, very good. Whereas they are telling you to calculate normal separately and additional separately. See, and how they are giving the answers. We all got the same answers, friends. But we did what? This is normal, no? Hello, this is normal, no? And this is additional, no, friends? So add these for normal and add these for additional. Simple. Why are you adding normal and additional together? Normal and additional, no. Normal separate, additional separate. That's it. Got it? Sure. Now, a newly qualified chartered accountant, Mr. Dhaval. He is a chartered accountant doing a business or a profession. Forget about additional depreciation now. It will not come. Only normal depreciation. Additional depreciation can be claimed only by manufacturing assessees engaged in manufacturing or what? Or power business. A person who is involved in profession cannot claim and calculate what? Cannot calculate and claim additional depreciation. Yes or no, friends? Okay. So commenced the practice and has acquired the following asset in his office during financial year 24-25. Wait. When the practice is commenced? This year. And in this year, he is commencing the practice. So to commence this practice, he is bringing these assets. Meaning that there is no opening WDV. Dash. All the assets will be, all the blocks will be created for the first time in this year. Now, calculate the amount of depreciation. They are telling you to calculate the amount of depreciation. But what we will be doing? We will be calculating the closing WDV also. And in the end, we will give that breakup of how much is the depreciation. Yes or no? Just the way in which we did in the last question. Same to same thing we are supposed to do here. But here no, they have tricked you. They have given you the purchase dates also. They have given you the dates on which the assets are put to use. So which date is relevant for you to see that whether the asset is used for 180 days or less, or 180 less than 180 days or 180 days or more. The date when the asset is put to use. These dates are important for you. Now you have to see that if the asset is purchased in this year and put to use for less than 180 days, then on that asset, how much depreciation you will get? You will get half. And if it is put to use for 180 days or more, you will get full. That's it. Got it? No? Pay attention. Now, underline this part. Just like in the last question, the same sentence was given. In this question also, the same sentence is given. What is the meaning of this sentence? We'll go and we'll check. Okay. Next one. Computer. There will be a block of computer which will be made now, including computer software. Cost is 35. Date of acquisition 27 September, meaning in my previous year it is acquired. And it is put to use in my previous year only, but on 1st October, meaning before my birthday it is put to use. Put to use for 180 days or more. So can I say this is greater than 180 days? Computer UPS put to use on 8th October, meaning less than 180 days. Computer printer 1st October, greater than 180 days. All the computer related items will be in the single block. Now books, there will be a separate block of books also. Okay, books other than annual publication, they are put to use on 1st April 2024. 1st April they are bought, 1st April they are put to use also. Greater than 180 days. Office furniture, another block will be made. And office furniture greater than 180 days because it was put to use on 1st April. Laptop, I will bring this laptop in the block of computers. Yes or no? And laptop was put to use for less than 180 days. 8th October. Can you see? Very simple question. Very simple. What I do, you know? Pay attention. Can you see this format? My favorite hobby. You all must be knowing what I am going to do now. Favorite hobby. Copy and paste. Oh, no need to delete. Why I am deleting it? Sir, now how many blocks should I prepare? 3, no? One for computer, second one for furniture, and the last one for book. Okay. So 4 blocks will be 3 blocks. Computers I will make first. Last one will be furniture. Furniture, what is the rate? 10%, no? Furniture 10%. Then books at the rate of 40%. Then computer at the rate of 40%. I just have to pick up the values and fill in the blanks. Yes or no? Come on, tell me. Opening. For all, there is no opening. Purchased and put to use for 180 days or more. 180 days or more. So 35,000 plus 12,500. This wait. Pay attention here. Can I say this 35 and this 12,500 is more than 180 days. So 35 plus 12,500 will be 47,500. Okay, no? So that 47,500 I will write here. Now check the books. Books 13,000 greater than 180 days. So 13,000 I will write here. Tell me furniture. Furniture also more than 180 days. 3 lakhs. 3 lakhs here. Now less than 180 days. Come on, tell me less than 180 days. Computer UPS? Yes. 8,500. And laptop 43,000. Getting my point? 8,500 plus 43,000 will give me 51,500. Any books for less than 180 days? No. Any furniture for less than 180 days? No. Dash, dash. Getting it or not? What is happening? Sure, no? Perfect. So now you can do the total. 51,500 plus 47,500 will give you 99,000. So I will write down 99,000 over here. Here it will be 13,000. And here it will be 3 lakhs. Any deletions happening from the block? No, no, no. No deletions. So it will be 99,000. It will be 13,000. And it will be 3 lakhs. Okay. Now this is the value at the end of the year of all those assets which are there in the block. Okay. Now on this value only I will now calculate the depreciation. Now I will calculate only normal depreciation, less normal depreciation on entire 99,000 I cannot calculate. On 51,500 out of 99 on 51,500 I will have to calculate at the rate of 40%. No, half of that. And on the balance 47,500 I will calculate at the rate of full 40%. On 13,000 books, I will calculate full 40%. On 3 lakh of furniture, I will calculate full 10%. Done, no sir? That's it. Now calculation. 51,500 into 20% will give me 10,300. 10,300 dash dash 47,500 into 40% will give me 19,000 dash dash 13,000 into 40% will give me 5,200. 5,200 dash dash. And on 3 lakh it is 10%. Oh, how many zeros I have put? 1 0 extra I had put, no? Here it will be dash, here it will be dash, here will be 30,000. Done, sir. So 99,000 minus 19,000 minus 10,300 will give you 69,700, and 13,000 minus 5,200 will give you 7,800, and here you will get 2,70,000. This is what? Closing WDV as on 31st March 2025. Got it, sir? Very difficult question. Very difficult. Now, therefore, normal depreciation will be 10,300 plus 19,000 plus 5,200 plus 30,000. So 10,300 plus 19,000 plus 5,200 plus 30,000 will give you 64,500. Check the final answer. Getting the same amount. Easy, difficult, very difficult. 64,500. Sir, it is 34,500. How come, sir? 34,500 plus 30,000 will give you 64,500. What they have done, you know? These mad people have calculated the depreciation for books also along with computer. And they themselves will not give you the marks for this, huh? See, in your study mat only, they have committed such kind of big error. And when you will do in the exam, no, they will cut your marks. They will say, no, books are different asset, computer different asset. What if both have same rate? You have to prepare separate block. So let them do whatever they want. Okay, no. We are going to do the correct thing. We have already calculated 3 blocks. 3 blocks. Book separately, computer separately, and furniture separately. Okay. Should I move ahead? Next one. Question number 4. Okay. Mr. Gama, a proprietor, started a business of manufacture. Started a business of manufacture of tires and tubes for motor vehicles on 1st of January 24. See, the business was started last year in January. The manufacturing unit was set up in this year, 1st May 2024. I don't have to see when the business was started. I have to see when the unit was set up. It is set up in this year. So when the unit is set up, that time only the assets will be brought, no? And the unit commenced operations from 1st of June 2024. So this is the first year in which the operations are commenced. This is the first year in which the operations are commenced, even though the business started last year. But this is the year in which the operations are commenced, meaning that whatever assets are bought, the block will be created for the first time in this year only. Getting my point? Now next, the total cost of plant and machinery installed in the unit is 120 CR. Meaning 120 crores worth of plant and machinery you have installed in this manufacturing plant. The said plant and machinery included second-hand plant and machinery bought for 20 crores. Second-hand is there. Second-hand plant and machinery used for business only, no? You are going to get normal, but additional depreciation will not be available. Getting my point? And new plant and machinery for scientific research acquired at a cost of 15. See, if you acquire any machinery for scientific research, no, on that the entire cost is available under section 35. Entire cost will be allowed there only. So for a plant and machinery whose cost is already allowed as a deduction under any other section, Will you get any depreciation on that? No. Forget about normal depreciation. How will you get additional also? So no normal, no additional on this 15 lakhs. Hello sir. Will you get normal on second hand? Yes, but you will not get additional on second hand. But on the balance, no. On the entire balance plant and machinery, you will get normal also, you will get additional also. This is so easy, very easy question. If this type of question will come in the exam, no, it will be coming as a case study, 2 marks MCQ. Okay, or it will be coming as a adjustment in the main question. Okay, pay attention. Compute the amount of depreciation allowable under section 32. See how bad these people are. They have not given you any hint. Depreciation allowable under section 32. So only normal depreciation is allowable under 32 or additional is also allowable. Yes. So they are indirectly telling you to calculate normal as well as additional because both the depreciation is allowable under section 32 only. Getting my point? Next one. Assume that this is the standard line which they have used in the earlier two questions also. Highlighted there also. I have highlighted here also. Okay. Now you are shifting out of the default tax regime, meaning not following 115 BSE. What if you follow 115 BSE? Will you get normal depre? Yes. Normal is not denied, but you will not get any additional depreciation. So in the first question where we took the additional depreciation, why we took the additional depreciation? There also he was shifting out. If in that question they tell you that the assessee is not shifting out, he remains in 115 BSE, then in the first question you will calculate additional. No, you will not calculate additional, you will calculate only normal. Here also you will calculate additional, normal both because you are shifting out. If they are telling you that you are not shifting out, then you will calculate only normal. Please don't calculate additional. Okay, everyone, pay attention now. How will you solve this question? This way, this way, this way also you can solve, but I will tell you a new way in which you can solve the question. Okay, see, total investment in plant and machinery 120 CR. I will bifurcate this into three parts. First, I will write down 85 CR. Then I will write 20 CR. Then I will write 15 CR. This is new plant and machinery used in manufacturing. This is second hand plant and machinery which is used in manufacturing only. This is plant and machinery used in business, for scientific research. Okay, this cost will be fully allowed under section 35. So on this you are not going to get any additional depreciation, you are not going to get any normal depreciation. But on 20 and 85 you are going to calculate depreciation. Okay, so can I say normal depre? If nothing is mentioned on plant and machinery, I will take general rate. Okay, no? And additional depreciation, the rate is what? 20%. So this time the normal depre as well as additional depre will be calculated on the same amount because actual cost will be WDV only. Getting my point? So normal depre on 85 crores. 85 into 15% will give me 12.75 CR. Please be very careful, huh? Don't round off. Don't make it 12.8 because the amounts are in crores. So the difference will be directly of 50,000. Getting my point? So don't round off like this. Now additional depre 85 into 20% will be 17 CR. On this I will get both the depreciations, no? Now what about second hand? I will not get any additional depreciation. On this I am not going to get normal and I am not going to get additional also. Okay. But on 20 CR I will get 15%. That is 3 CR. Got it everyone? So 12.75 and 3. And plant and machinery used for scientific research. Why I have not taken any depreciation on that? Since entire actual cost, that is 15 crore, is already allowed under section 35. It is already allowed under 35. So on that, no normal, no additional, entire we have allowed only, no? Now tell me, how much is this and how much is this? Total depreciation. Total depre 12.75 plus 17 will give me 29.75 CR. And here it will be 3 crore. Getting my point? Total debris. Or what I can do, instead of totaling here, wait, don't do it. Instead of totaling here, I will do total normal depreciation, which will be 12.75 plus 3 CR will be 15.75 CR, and total additional depreciation will be only 17 CR. These two amounts. Very difficult, no sir? Very difficult. And add both of them. You will get total depreciation under section 32. Got it? So therefore, total depreciation under section 32 is 32.75 CR. This is my final answer. Can you please check the answer? Same sir or different sir? Yo, same. Till illustration 4 we have covered. Now come to test your knowledge. Test your knowledge. Let's test your knowledge. In test your knowledge, come to question number 1. Mark this question important. Mark this question important. Mr. Venus engaged in manufacture of pesticides furnishes the following particulars relating to its manufacturing unit at Chennai for the year ended 31st March 2025. Okay. Plant and machinery WDV is given 30 lakhs. So this was WDV as on the last day of last year. And they are not saying that from this WDV the depreciation was reduced. And depreciation also for the last year they have given separately. Meaning that after reducing depreciation from the last year's WDV, whatever WDV remains will become opening in my previous year. Yes or no? So, what will be the WDV? Come on, 30 minus 4.75 will be 25.5 lakhs, 25.25. This is the closing WDV after depreciation for the last year will become opening in this year for plant and machinery. Yes or no? Now, in that same block, two new plant and machineries are acquired. One before my birthday and one after my birthday. This is greater than 180 and this is less than 180. Computer purchased after my birthday, less than 180. But for this, a new block will be created. There is no opening, but the new block will be created. Now tell me, on plant and machinery, you will get normal additional both. If you shift out of 115 BSE, yes or no? But if you don't shift out of 115 BSE, on plant and machinery, you will get only normal, you will not get any additional. And computer anyways, under both the regimes, 115 BSE or no 115 BSE, computer you are not going to get any additional depreciation, yes or no? Now they are saying that all the assets were purchased by account pay check. We will highlight this. Later on, we'll see what is to be done with this. Okay, no? All the assets were put to use immediately. That is what we have also assumed. That date of purchase is given. If nothing is mentioned that when the assets were put to use, we are assuming as on that same date, the asset is put to use. Hence, we have already written greater than 180, less than 180, yes or no? Next one. New machinery purchased on 1st of December 2024 and computer have been installed in office. Wow, wonderful. This as well as this, both are installed in office, meaning that, sir, here no, normal depre will come, additional depre will not come. Here also, normal depre will come, additional depre will not come. If I don't follow 115 BSE, shift out of 115 BSE, then on this, normal depre will also come, additional depre will also come. But on the opening, no, opening only normal will be calculated. Because that is not the machinery which is purchased in this year, it is already purchased. But see, now this information becomes very important. This information is also important and this information is also important. During the year ended 31st March 2024, meaning last year, a new machinery had been purchased on 31st October 23, meaning that last year a machinery was purchased after my birthday. On that, last year you would have claimed additional depreciation, but only half was allowed. So on that, half will be allowed in this year, no? See, if any new plant and machinery acquired and installed in the first year, it was put to use for less than 180 days. On that, additional depreciation becomes half. Remaining additional 10% will be allowed in the next year, no? So this year, purchased and put to use for less than 180 days. Half you will claim in this year. Half you will claim in the next year, no? Likewise, for the last year, half you had claimed in that year, half additional depreciation you will claim in this year, no? Hello, sir. So when you will be calculating additional depreciation, no? Additional depreciation on the new plant and machinery acquired in this year will also be calculated, and additional depreciation half amount which you could not claim in the last year will also be claimed in this year. Yes or no? And the cost of that machine was 10 lakh. Additional depreciation besides normal depreciation had been claimed thereon. Meaning last year on this machinery, additional was also claimed, normal was also claimed. But both were claimed half. Half of the additional depreciation on this machinery will be claimed in this year. Okay, important. See, this type of question, this kind of mischiefs they will do in the exam. Next one, depreciation rate for machinery may be taken at 15%. This is the normal rate of depreciation which they have given. Assessee has no brought forward business loss or unabsorbed depreciation. This information is not relevant for us right now. Compute the depreciation available to the assessee as per the provisions of the Income Tax Act and the WDV of the different blocks. See, now they are telling you to calculate the WDV also and the WDV. If he exercises the option of shifting out, meaning 115 BAC not followed, and if he does not opt out, means 115 BAC followed. Okay, now how to solve this question? Shall we start? Okay, pay attention. My favorite work. Sorry, I forgot. My favorite work. Copy and then paste. And the first assumption is the assessee is not following 115 BAC. We are assuming that he is not following 115 BAC and we are making this calculation. Okay. Now, how many blocks? 2 blocks only, no? Plant and machinery and computer. So, plant and machinery at the rate of 15% and computer at the rate of 40%. Let's start. What was the opening? 25.25. Plant and machinery. We have already calculated, yes or no? All the rupees are in lakhs. So if you try to round off, the difference will be in few thousand or few hundreds. Getting my point? So don't round off. Write down the full. At least 3 or 4 decimal points. Yes or no? Computer will be dash. Additions happened? Yes. What additions happened? Let's check. 10, 8 and 4. Here I will write 10. Here I will write 8. And here I will write 4. Any problems till here? No problem, sir. Very good. So 25.25 plus 18 will give me 43.25 here. And here it will be 4. No deletion, sir. So the depreciable value will be 43.25 and here it will be 4. Now I will less normal depreciation on entire 43.25, no, on 8 lakhs at the rate of 15% into 1 by 2 and on balance 43 minus 8 will be 35.25 lakhs at the rate of 15%. Everyone understood this much? Out of 43.25 on 8 lakhs I will calculate half, but on the balance amount I will calculate full, and on the entire 4 lakhs of computer I will calculate 40%, no, half of that, because entire is less than 180 days. Got it? So 8 into 15% divided by 2. will give me 0.6 lakhs. Here it will be 35.25 into 15%, that will be 5.2875. 5.2875 lakhs. Okay. And on 4 lakhs, it will be 20%. 4 into 20% will be 0.8. 0.8 lakhs. Now less additional depreciation on 10 lakhs. Which 10 lakhs, sir? Sir, this 10 lakhs. This 10 lakhs I am talking. Color, green color. The plant and machinery which is purchased in this year and put to use for 180 days or more. On that, additional depreciation will come, and that will come at the rate of 20%. And this is for previous year 24-25. And one more 10 lakh. Cost of one more plant and machinery was 10 lakh, which was purchased in last year, meaning previous year 23-24. On that you claimed half in the last year, half you will claim in this year. This is very, very, very important, this part. Okay. Now tell me. Here it will be dash, here it will be dash. Here it will be 2 lakhs and here it will be 1 lakh. Got it, sir? Next one. So tell me what to do now. What to do? I will calculate the WDV of the block now. So 43.25 minus 0.6 minus 5.2875 minus 2 minus 1. It will give me 34.3625. 34.3625 lakhs. And here it will be 3.2 lakhs. This is the closing WDV as on 31st March 2025. Yes or no? Sure. Now what to do? Normal depreciation. Normal depreciation is 0.6 plus 5.2875 plus 0.8. So 5.2875 plus 0.6 plus 0.8 will give me 6.6875, and additional depreciation will be 2 lakh plus 1 lakh, that will be 3 lakhs. 3 lakhs and 6.6875. Therefore, total depreciation will be 6.6875 plus 3 will give me 9.6875 lakhs. Check the answer. They have mixed everything. First of all, the answer will not be understood also. Amounts are these only. But few amounts, the way in which I have presented and the way which is presented there is different. Check the final answer. This is the value on which the depreciation needs to be calculated. On this, I have calculated normal. and additional is to be calculated on what? On actual cost. But actual cost of all will not be used. Why? Because the new plant and machinery which is bought for 8 lakhs and the computer are installed in office. On that additional will not come. Additional will come on only 10 lakhs. Yes or no? And the additional will come on the balance, the earlier 10 lakhs also. So additional is calculated on 10 and 10. On the last year's 10 lakh, I have calculated half because half is already claimed in last year. But 10 lakh which I have acquired in this year and put to use for 180 days or more, on that full additional depreciation 20% will be allowed. Now, normal as well as additional depreciation both are to be reduced to calculate your closing WDV. So, I have reduced both and I have calculated my closing WDV. How much was normal in this year? Normal was 0.6, 5.2875 plus 0.8. How much was additional which I am going to claim in this year? 2 plus 1, 3. And how much is the total depreciation? Normal plus additional is my total. That's it. Got it now? Now, pay attention. Pay attention. Same stuff. Copy. Copy. And the next page. Paste. What I will write here, Now this time 115 BSc followed. Everything remains same. Everything remains same. This also remains same. Normal debris also remains same. Only this additional debris will not come. Not even for this year, not even for last year. Getting my point? So this additional debris will now become 0. This will become 0. I will not write additional depreciation only. But I will write down a note that why I have not taken additional depreciation. Because the SSC is following 115 BSc. That's it. Got it? So the closing WDV will change. That's it. Calculate the amounts. 43.25 minus 0.6 minus 5.2875. 5.2875 will be 37.3625. 37.3625. Did you see? 3 lakh increased. Why that 3 lakh? Additional depreciation was not claimed. And here it will remain same. 3.2 lakhs. And the normal depreciation will be how much? Same, no? 0.6 plus 5.2875 plus 0.8. That will be same only, which was last time. How much? 6.6875. 6.6875. And this is your total depreciation also, because no additional depreciation is there. So normal is also this much and total depreciation is also this much. Please check the answers. They would have done 6.69. Instead of 6.6875, they would have done 6.69. Instead of 37.36, they would have done 3625, they would have done 36.36. Here they would have done 9.69. Here it would be 9.69. Rounded off. We have written the full things. Got it, everyone? Sure? Very good. Next question. 2. Mr. Abhimanyu is engaged in business of generation and distribution of electric power. The business is power business. He opts to claim depreciation on WDV for income tax purposes. Meaning that, do you remember? Assessee engaged in power business can also claim depreciation on WDV basis. If this option was taken in the first year, then in the first year and in all the subsequent years, the depreciation will be available. The depreciation will be available on WDV basis. So this assessee has already opted for WDV basis. So even if the business is power business, we are not going to calculate depreciation on SLM basis. We are going to calculate depreciation on WDV basis only. Okay, on the value of the block. Next one, for the from the following details, compute the depreciation allowable. As per the provisions of the Income Tax Act 1961 for the assessment year 25-26, assuming he has exercised the option of shifting out, 115 BSc not followed. Now, WDV of the block as on 31st March 2024, WDV given 50. So this was the WDV as on the last day of the last previous year. And depreciation for the last previous year also given, meaning that this depreciation has to be reduced. Then we will get the depreciation, then we will get the WDV as on the last day of the last previous year after depre, which will become opening in this year. So can I say here it will be 42.5. This will become opening in my previous year. Okay. New machinery purchased 12th October 2024, less than 180 days. On that, normal will also be available and additional will also be available. Why? Why, sir? Because if it is already included in WDV, they will not be giving this separately. Depreciation separately given for last year, no? Meaning that they have not reduced. So we have to reduce, and then WDV for the last year will be there, which will be opening for our previous year. If they will directly give you WDV, no depreciation for last year given, meaning that depreciation already reduced. Getting my point? In one question we saw that also. But if they are deliberately giving separately the depreciation also for last year and WDV also for last year, that means they want us to reduce that depreciation. After depreciation, whatever WDV was there, that we are going to take as opening. Getting my point? Okay. Next one. See, machinery imported from Colombo on 12th April 24, meaning that this machinery was used for more than 180 days. But this machinery has been used only in Colombo earlier, and assessee is the first user in India. See, this is a second-hand machinery. Even if you are the first user in India, but earlier it was used by someone else, no? So you are not bringing this in your power generation business for the first time and using for the first time. Getting my point? The machine was already used earlier. So what? It was used outside India, but it was used only, no? So this is a second hand plant and machinery. On that, normal will be available because it is used in your business. But additional depreciation will not be available. Yes or no? Next one, this new computer installed in generation wing. Important. Power generation. In that power generation wing, this computer was installed, meaning that the computer is used in the main business. On that computer, normal will also be available, additional will also be available. Got it, everyone? And it was acquired on 15th of July, meaning before my birthday. More than 180 days. Now, based on this information, you are supposed to compute what? Depreciation. Very easy question. But mark this question also important. Okay. Now, these two questions, they have not given in illustration. They have given in test your knowledge. If you don't solve all these questions and you go in the exams, these type of questions only they are asking. Come on, let's start. Shall I start now? Now what is the opening WDV of the plant and machinery? It was 42.5. So I will write down 42.5. Computer, no opening because it was purchased for the first time in this year. Now new plant and machinery less than 180, it was 10 lakhs. It was 10 lakhs. And more than 180 days, it was 9 lakhs. It was 9 lakhs. Computer, it was for less than 180 days, it is 2 lakhs. Computer is 2 lakhs. And here it will be dash. Now, total. So, 42.5 plus 19 will give me 61.5. And here it will be 2. Okay. Now pay attention. No deletions during the year. So the value will be 61.5 and 2. On this now I will calculate normal depreciation. Normal depreciation on entire 61.5 at 15%? No. Out of that on 10 lakhs at half rate. So it will be 10 lakh into 7.5% will be 0.75. Done. Here it will be dash. On 51.5 lakhs. Now it will be full 15% rate. So 51.5 into 15% will give me 7.725. Here it will be dash. And on 2 lakhs, WDV of the computer final at the rate of 40%, but this will also become half. So on 2 lakh at the rate of 20% will be 0.4 lakhs. Are you all getting these amounts? Sure. Kaushik. Perfect. Now less. See, additional depreciation I will get on all the new asset. New plant and machinery also and new computer also. Why? Because computer is used in power generation unit. Yes or no? So what was the cost? 9 lakh, 10 lakh and 2 lakhs. On all of them I can claim. But no. The second hand plant and machinery was there. On that I cannot claim additional depreciation. So how much was the value of second hand plant and machinery? It was 9 lakhs. On this 9 lakh I cannot claim. Okay, no? So additional depreciation on 10 lakhs will be at the rate of 20%. No, it will be half because this was used for less than 180 days. And on 2 lakh rupees of computer, it will be at 20%. No, this will also become half because computer was also used for less than 180 days. Okay, no? So 10 lakh into 10% will be 1 lakh. And 2 lakh into 10% will be 0.2. Getting it, everyone? Sure, no? So here it is dash, here it is dash. Now tell me, 61.5 minus 0.75 minus 7.725 minus 1 will give me 52.025. And 2 minus 0.6 will give me 1.4 lakhs. This is my closing WDV as on 31st March 2025. Okay, therefore my normal depreciation in this case total is 0.75 plus 7.725 plus 0.4 and additional depreciation. Wait, first let me total this. 0.75 plus 7.725 plus 0.4 will be 8.875 lakhs and additional depreciation will be 1 plus 0.2 will be 1.2 lakhs and total depreciation will be total of these two. Yes or no? So can you calculate the total of these two? Will be 10.075 lakhs. This is the total depreciation including normal and additional. Computer is greater than 180 days or what? Computer is greater than 180 days. Yes. My mistake in computer. So computer here I will take only 40%. So this will be 0.8. My mistake happened. This is 0.8. And here also on computer I will take full 20%. So this will become 0.4. So this will also change. This will also change. And this will also change. My mistake, guys. My mistake. Okay. So now what was the final amount? 2 minus 1.2 will be 0.8 lakhs, no? Here it will be 0.8 lakhs. Now it is okay, no? So this will be 0.8. I will add here. So 0.75 plus 7.725 plus 0.8 will be 9.275 lakhs. And this 0.2, no, this will be 0.4. So it will be 1.4 lakhs. Plus 1.4 lakhs will give me 10.675 lakhs. 10.675 lakhs. Now it is okay. Correct, no? Very good. See, even I can commit mistakes like this. So the more practice you will do, the more chances that these type of silly mistakes will be less. Okay. So I hope that the depreciation concept, you are comfortable with it now. Okay. Please check. A car purchased by Dr. Soman on 10th August 21. Is it purchased right now or in the past? In the previous year, 21-22, the car was purchased for 5,25,000. Can I say this was the actual cost of the car? And it was purchased for personal purpose. Now that car is brought into professional use during the previous year 24-25. So in previous year 24-25, the car was brought into his profession, which was earlier used by him for personal purposes. Yes or no? When its market value of the car was 2,50,000. So will this market value be taken as your cost? Or the actual cost will be taken? Actual cost will be taken. What if this was a building? Then also the market value was not taken. Then actual cost minus the depreciation for 21-22, 22-23 and 23-24. For these 3 years, the depreciation would have been reduced on notional basis. Whatever WDV which was there as on 31st March 2024, that WDV would have been taken for the building as its actual cost. Now from 24-25 onwards, the depreciation would have been allowed on that actual cost of the building. Yes or no? But since it is not a building, it is a car, which is not a building. Therefore, explanation number 5 to section 43(1) is not applicable. Therefore, actual cost only, which is 5,25,000 incurred in previous year 21-22, will only be taken as actual cost. Getting my point? And if you read the answer, no, the same thing is given. But in that answer, read this note too. Read this note. They're talking about that building only, which I've already explained. Got it? This type of question will not come in the exam, don't worry. But this type of question can come as a part of adjustment. Now, in the question, they have given you a block of car, opening WDV and everything is given. Now, in the adjustment, they will tell you, in your business, you are bringing a car in this year. This car is not bought in this year. No. This car was bought in 21-22 for 5,25,000. The same question which is framed here, no, this will be given as a adjustment. Now, in the value of the block, you will do the additions. This car will come. Fair market value and everything will be given. They will give you the depreciation rate and everything for the car. Ignore everything. Whatever cost you have incurred for the car, no, 5,25,000 in 21-22, bring that cost only in the block. That's it. Getting my point? That's it. As simple as that. Just imagine how they are exploiting all these details in the question. You should be aware about those things. Okay? And the biggest mistake which we do, we just keep on solving the question without even, knowing that if this question is twisted. Just have an analytical mind. No. If this question was framed giving you the details of the building, if the same detail was given for the building, what would have been my answer? You have to think like that. Getting my point? What if this same thing is coming in my question, big question? So whenever you will be solving the big questions, no? While solving the big question, in some question, they will tell you to calculate depreciation. In that, they have given the block of car also, additions also. That time, this question should strike you there. That what if the thing which happened in question number 2, if that same type of adjustment was given here? If you don't think like that, no, your mind will not expand. Your thinking will not expand. You are not supposed to do only what I am doing. You have to think out of the box. You have to think a little bit more. Because we all are chartered accountants. Come on. What if this happens? Then what should I do? What if that happens? What I will do? Your mind should be working like that. And if you think like that, no, only then new question will arise. And you will try to find out, new questions will arise, new problems will you will face. And only then you will try to solve those problems. This will enhance your knowledge base. Getting my point? See, if I want, I can just tell you this and I can go. You will never know that how to, actually think about this. How to actually go about this from here. So if I'm giving a little bit of spark, no, if you are getting influenced by my thinking like this, no, now from now onwards, you will start thinking like me. And if you start thinking like this, what will happen? New problems, new question will creep up in your mind. And when these new questions will creep up in your mind, no, you will get new answers. Thereby, your knowledge base will increase. The role of the teacher is that only. But ultimately, you have to be that much proactive also. Got it? So teachers, whatever is coming in the exam, will write and will pass. Then you will pass with only this much knowledge. Knowledge base will be very less. And just imagine if some twist they are giving in the questions and you don't have this kind of mindset. You will come out of the exam and you will be yelling, oh my God, the paper was very difficult. Papers are never difficult, I'm telling you. It's the way how you approach the subject. It makes it difficult for you or easy for you. Getting my point? So now let's come to the illustration number 5. Illustration number 5. Mr. A furnishes the following particulars for the previous year 24-25. Compute the deduction allowable under section 35. You are just supposed to calculate that deduction. How much amount will be allowed as a deduction from your business income under section 35. Next one. Okay, he's following 115 BSc and he is not following 115 BSc. Okay, no? So what we are going to do, here we are going to write if he is not following 115 BSc, and here we are writing if he is following 115 BAC. Now look at the first expense. Amount paid to notified approved Indian Institute of Science, Bangalore for scientific research. Scientific research donation is made. Approved institution, scientific research donation is made. Donation will be allowed as a deduction if you don't follow 115 BSc. But if you follow 115 BSc, this 1 lakh rupees of donation will not be allowed. Yes or no? Now next one. Amount paid to IIT Delhi for an approved scientific research program. Even IITs are approved to conduct certain, scientific research programs and all. So if the amount is donated to IIT also, it will be allowed as a deduction. But if you are not following 115 BSc, if you are following 115 BSc, then this will also not be allowed because this is a donation. Okay, next one. Amount paid to X Limited. X Limited is a company which is registered in India, Indian company, which has as its main object scientific research and development. Scientific R&D is the main object of this company. Any Indian company with a main object of conducting scientific research and development, to that Indian company also, if you are making a donation, that donation will be available as a deduction. But if you are following 115 BSc, then it will not be available. Done? Next one. Now you have incurred certain expenditures on in-house scientific research as approved by the prescribed authority related to his business. Now all the scientific research which you are doing in-house was related to your business. On that in-house scientific research, you are doing such expenditures. What expenditure you are doing? Revenue expenditure you are incurring. Will it be allowed? Yes. And even if you are following 115 BSc, still it will be allowed. Yes or no? Capital expenditure allowed? Yes sir, capital expenditure will be allowed, but it will be excluding cost of land. So land and building total is 7,50,000. How much is the value of the land? Cost of acquisition of land is 5 lakh, so that will be reduced. How much will remain? 2,50,000. That 250 will be allowed. It will be allowed. Capital expenditure on scientific research will also be allowed. Revenue expenditure on scientific research will also be allowed under both the regimes. Whether you follow 115 BSc or you don't follow 115 BSc. Done? Now you are supposed to add all these amounts. 1 lakh plus 2 lakh 50 plus 4 lakh will give you 7 lakh 50. 7 lakh 50 plus 2 lakh 50 will give you 10 lakh. 10 lakh plus 3 lakh will give you 13 lakh. Meaning that if you don't follow 115 BSc, your deduction will be 13 lakhs. And if you follow 115 BSc, your total deduction will be only 3 lakh plus 2 lakh 50. Hello? 5 lakh 50. Now whatever you have done takes on cross, no? You are just supposed to present it. That's it. Simple. Assessee following 115 BSc, tick mark. Write down point number 1, point number 2, point number 3. In the amount column, nil, nil, nil. In the bracket you will write down not allowed donations for scientific research, statistical research, research in social sciences are not allowed as a deduction because the assessee is following 115 BSc. Nil, nil, nil. Then write down expenditure. Both the expenditure you write down the amount. Make the total. 5 lakh 50. Total deduction under section 35. Same to same format, copy and paste. 115 BSc not followed. donation, 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 amount, amount, amount. Done. Expenditure, expenditure, amount, amount. Total 13 lakh. Done. In particulars, what you will write? The same thing which is given here in particulars, you will write there also in the answer. Not at all difficult. Hello? Will you remember? Sure, no? Very good, sir. So this was one question, okay? Now come to question number 6. Mark this question important. Very good question this is. Question number 6. See. Mr. A has commenced operations of the business of setting up a warehousing facility for storage of food grains, sugar and edible oil. If you remember, yesterday we saw the list of those specified businesses, 15 businesses. In that, warehousing business was there, but only 2 warehousing businesses were there. Warehousing of food grains, agricultural produce, as well as warehousing of sugar. But warehousing of edible oil was not there. Meaning that out of the 3 warehousing businesses which I have commenced, only 2 warehousing businesses are specified businesses. Getting my point? Now, the operations are commenced on 1st April 2024. So, if I say that in the previous year 24-25, I say that this is my previous year 24-25. This is 1st April 2024. On this date, no, operations are commenced. So business commencement is in my previous year. Now, out of these 3 businesses whose operations which I have commenced, which is warehousing of what? Food grain, sugar, as well as edible oil. For these 3 businesses, I have incurred some expenses, which they are saying that I have incurred some capital expenditures. Let's see. He incurred capital expenditure of 80, 60 and 50 lakhs respectively on purchase of land and building. Only building or land and building? Land and building. During the period January 24 to March 24. Very good. So can I say this is a January 24 to March 24 period. This is the period prior to the commencement. In this period, I have incurred cost of land and building 80, 60 and 50. Out of that cost of land and building, cost of land must be ignored and cost of building, this can be claimed under section 35AD, under section 35AD, and from this also it will be claimed, but it will be claimed in the form of depreciation. Land cannot be claimed, cost of land cannot be claimed in the form of depreciation also, yes or no? So cost of land I have to ignore. Whatever the cost of building was there, that cost of building I can claim from food grain business and this sugar warehousing business. Under section 35AD I will claim. And that is a pre-commencement expenditure. I will claim that expenditure in the year in which I have commenced the business, provided this cost is capitalized in this balance sheet. Hello. So the balance sheet for the year in which the business was commenced, in that balance sheet, this cost should be capitalized. Only then this cost will be allowed in the year of commencement. Yes or no? But the entire cost will not be allowed. Only the cost of building will be allowed. Land cost will be ignored. It will be ignored for depreciation also. Getting my point? Next one. See, they are saying that this cost was incurred during the period Jan to March exclusively for above businesses. Very good. And capitalized the same in the books as on 1st April 24. please make it 24. This is not 23, this is 24. Okay. The cost of land included in the above figures is 50, 40 and 30. So now you will get the cost of building also. Reduce this cost of land out of that cost, you will get cost of building. Very good. Now they are saying that during the previous year 24-25, he incurred capital expenditure of 20, 15 and 10 lakh respectively for extension or reconstruction of the building purchased. Meaning that now in the previous year 24-25 also, some cost of building is incurred. Can I say this was pre? So this is post. It will be allowed in the year in which it is commenced. So when it is, when it is incurred, it will be allowed in the year in which it is incurred. So in which year it is incurred? 24-25. So it will be allowed in 24-25. And also the pre-commencement expenditure will be allowed in the year of commencement. And year of commencement happens to be 24-25 only. Yes or no? Now they are saying, okay, compute the income under the head PGBP and the losses to be carried forward, assuming that Mr. A is exercising the option of shifting out. Sir, what if he was not shifting out? Then 35 AD deduction is not available. If you follow section 115 BSE, no, then under section 115 BSE, the deduction for section 35 AD is not available. So this was the second thing which is not available. One. No, not just the second thing. This is the third thing. First one, additional depreciation not available. If you follow 115 BSE, do you remember? Second, donations made for scientific research, etc. Donations made for scientific research, etc. will not be allowed under section 35. And third, deduction under section 35 AD, capital expenditure under section 35 AD will not be available. Now this you will have to claim in the form of depreciation. Wait. But here we are shifting out, meaning that we are going to get 35 AD deduction. So 115 BSE not followed. Very good. And has fulfilled all the conditions specified under section 35 AD and wants to claim deduction under section 35 AD and has not claimed any deduction under chapter 6A and heading C. Heading C deduction means yesterday only I told that 80 IA to 80 RRB deduction of chapter 6A are there in chapter 6A heading C. So chapter 6A heading C deductions are which deductions? 80 IA to 80 RRB. So he is not claiming these deductions also. If you are claiming 10 AA, if you are claiming 80 IA to RRB, you cannot claim 35 AD. But in this question they are saying that he is claiming 35 AD and he is not claiming 10 AA or 80 IA to RRB. Okay, no? And all the other conditions of section 35 AD are fulfilled. Now profits from the business, 3 businesses are given. Profits are before claiming deduction for 35 AD and 32. 16, 14 and 31. And all the payments are made by account pay check. Now you understood why this information is given? If they would have told you, no, that all the above costs are made by way of cross check, cash, then all the costs ignored. No deduction under 35D, no depreciation also, because that amount will not be treated as actual cost only. Proviso to section 43(1) will be applicable. Getting my point? But all the costs will be considered because all the costs are incurred by way of account pay check or ECS. Done? Now please pay attention. We have understood the entire question. In the question, they are asking you to compute the taxable business profits as well as the loss which will be carried forward. So now what we are going to do? Computation of taxable income, taxable business income and losses to be carried forward for which businesses? Come on, tell me. Last one is warehousing. Warehousing of what? Edible oil, food grains, and sugar. Now, I'll write particulars over here. So, net profits as given 16, 14, and 31. 16 lakhs, 14 lakhs, and 31 lakhs. Can I say this was the net profit before section 35 deduction and section 32? So what I will do, I will reduce depreciation under section 32, but not from here, not from here. I will be reducing from here. Okay. And then I will be reducing capital expenditure under section 35 AD. From here also I will reduce, from here also I will reduce, but not from here because that is not an eligible business. Okay, no. I just have to fill in the blanks and I'll get the answer. 4 line the answer will be there. But what is the amounts to be, written over here? That is important. Now pay attention. I will write pre-commencement capital expenditure on land and building. That was how much? 80, 60 and 50, no? 80 lakhs, 60 lakhs and 50 lakhs. Out of that less cost of land, which was 50, 40 and 30. 40 lakhs and 30 lakhs. Done. So, pre-commencement capital expenditure on building will remain. That is 30 lakhs, 20 lakhs, 20 lakhs. Now tell me, will this 35 lakhs and 20 lakhs be allowed under section 35 AD? Yes. But in the year of commencement, which is previous year 24-25. So, under section 35 AD, this will be allowed in previous year 24-25. And sir, this will also be allowed under section 35 AD, sir. However, this 20 lakhs, no, on this, we will claim depreciation under section 32. But this depreciation, I will start claiming from the year in which I have started the business. The business is commenced. Okay. So the building is used in that business. So the depreciation on that building will be claimed with effect from the year in which the business is commenced. Okay, no? Wait. Now pay attention. There is post commencement capital expenditure also on building. Extension etc. of the building happened. How much? It is 20, 15 and 10. It is 20 lakhs, 15 lakhs and 10 lakhs. The same thing I will copy and paste. Sir, copy and paste. Because post commencement capital expenditure on the building incurred in which previous year? In previous year 24-25. So it will be allowed as a deduction in 24-25 only. And the last one will be allowed as a deduction in the form of depreciation in this year only. But not fully. Some part of that. Done, no? So now can I say total capital expenditure which is allowable is how much? 20 plus 30. This 20 plus this 30 will be 50 lakhs. This 20 and this 15 will be 35 lakhs. And this 20 and this 10 will be 30 lakhs. This will be allowed in the form of depreciation. But the earlier two will be allowed under section 35D. That's it. On this, depreciation will be calculated at what rate? 10%, because it is cost of building. Cost of building rate of depreciation is 10%. Yes or no? So the depreciation will be 3 lakhs only. Now this entire information I will put in my table. Can I say here I can claim 50 lakhs? Here I can claim entire 35 lakhs. But entire 30 lakhs cannot be claimed. On that I will claim depreciation. How much? 3 lakhs. Now it will give you 28 lakh of profit. Here you are going to get 34 lakhs loss. And here you are going to get 21 lakhs loss. Did I tell you that the loss of a specified business can be adjusted only against the profit of specified business? Did I tell you? Yes, no? So any of these losses cannot be adjusted against 28 lakhs because 28 lakh is not a profit of a specified business. It is a profit of normal business. Warehousing of edible oil is not a specified business. It is a normal business. So these two losses cannot be adjusted against 28 lakhs. So can I say, therefore my taxable PGBP income for this year will be 28 lakhs only? Yes or no? And these two losses cannot be adjusted in this year. They will be carried forward. Therefore, loss of specified business to be carried forward is how much? 55 lakhs. See how easy this question was. They have tried to make it complicated, but the question is very easy. Answer is easy. Done, friends? Sure. This question is over. Come to the next question now. Sixth is done. Okay, no? Come to the next question. Check the answer. See, this same answer we also got. Come to illustration number 7. Mark this question also as important. Mr. Suraj, a proprietor, commenced operations of a business of a new 3-star hotel in Madurai, Tamil Nadu on 1st of April 2024. He incurred capital expenditure of 50 lakhs during the period January 24 to March 24 exclusively for the above business, meaning that this was pre-commencement capital expenditure. Now they are not saying that it is this 50 lakh includes land also. Yes or no? That means this 50 lakh is eligible capital expenditure. Okay. Next one, and that was capitalized also in the books of accounts. Very good. On 1st April 2024. Okay. Yes, it was capitalized on 1st April 24. Further, during the previous year 24-25, he incurred capital expenditure of 2 crores, out of which 1.5 crore was for acquisition of the land. See, this is the post-commencement capital expenditure which includes cost of land also. So, we will reduce that cost of land. 50 lakhs will be the cost of building post-commencement. That will be allowed in the year in which it is incurred. Very good. Now, compute the income under the head PGBP. Assuming that he has fulfilled all the conditions specified under section 35AD and opted for claiming deduction under section 35AD, and he has not claimed any deduction under chapter 6A under heading C, and he is also shifting out of the default tax regime. Yes or no? So profits from the business of running this hotel, meaning Madurai hotel, before claiming deduction under section 35AD was 25 lakhs. Assume that he also has another existing business of running a 4-star hotel in Coimbatore, which commenced operations 15 years back, prior to 1st April 2010 also. Getting my point? That time for hotel business, this deduction was not available. It became effective from 1st April 2010. So 15 years back, that time this Coimbatore business was started. So the Coimbatore business, for that is a specified business, but 35AD deduction was not available. Right? So the business income from that Coimbatore business, Coimbatore hotel, is what? How much? 120 lakhs. Now you are supposed to calculate what? Calculate the PGBP income, total PGBP income. Assume that payments of capital expenditure were made by net banking. Very good. So what we are going to do? First of all, profits given were 25 lakhs and 120 lakhs. Out of this 25 lakhs, pre-commencement and post-commencement, both the capital expenditure will be allowed under section 35AD, pre and post under section 35AD. So what was that? 50 plus 50, no? 100 lakhs. So this business will give you 75 lakhs and the profit of this business is 120. So can you adjust this profit against 120? The answer is yes. Why? Because the loss of a specified business can be adjusted against the profit of a specified business, whether the profit is of a specified business for which 35D deduction is available or not will not make any difference. Yes or no? See, this in this way they will be asking you these type of concepts in the exam. Okay. So finally 45 lakhs will be the remaining profit out of this. This will be your taxable PGBP income. Okay. That is given as your answer. Please check. 45 lakhs. Sure everyone? Should I move ahead? Okay. Now coming to the next question. Illustration number 8. Also mark this question important. Mr. Arnav is a proprietor having 2 units. Unit A carries on specified business of setting up and operating a warehousing facility for storage of sugar. Okay, so Unit A is doing a specified business. Unit B carries on non-specified business of operating a warehousing facility for storage of edible oil. Very good. So Unit A is your specified business. Unit B is your non-specified business. Now they are saying that Unit A commenced operation last year, 1st April 2023, last year. and it claimed deduction of 100 lakhs incurred on purchase of two buildings for 50 lakhs each for operating a warehousing facility for storage of sugar under section 35AD. Meaning that last year only it acquired two buildings in unit A, each costing 50 lakhs. So 50 plus 50, 100 lakhs. Cost of those buildings were claimed as a deduction from the income of unit A business. That time, Arnav would have promised that I am going to use these two buildings in specified business of unit A only. But in this year, 24-25, in February 26-25, make it February 26. 24, wait. 25 is okay. February 25, yes. In this year, February 25, 24-25, in the month of February 25, he broke the promise. For both the buildings? No, only one building, which was acquired last year for 50 lakhs, whose cost was allowed last year fully. Now that building he has brought for unit B, which is not a specified business. So what will happen now? 35AD7A says that the asset which was acquired for a specified business has to be used in that same specified business for a period of 8 years, beginning from the year in which it was acquired. Yes or no? Full stop, paragraph. However, if that asset was within 8 years used for some other business, then 35AD7B will be applicable. And as per the provisions of section 35AD, subsection 7B, the actual cost of that asset allowed under section 35AD, 50 lakhs, minus the depreciation for the period for which it was actually used for that specified business. In our case, how many years? 23-24 only 1 year. So for that 1 year, the depreciation on that building will be how much? 10% of 50 lakhs, 5 lakhs only. Minus that, you will get 45 lakhs. That 45 lakhs will be treated as deemed PGBP income in unit A business. Now that same 45 lakhs, as per the proviso to explanation 13 under section 43(1), will now be treated as the actual cost of what? Actual cost of building in unit B business. Getting my point? Now how to present this? See, they have given you the answers like this. Okay, no? So the presentation is very easy. First of all, we'll write down as per, write down, I'm dictating. Please write down, I'm dictating. As per section 35AD, subsection 7A. If an asset is acquired for specified business, and its actual cost is allowed as a deduction under section 35AD, then that asset shall be used in that same specified business for a period of 8 years, including the year of its acquisition. Full stop. paragraph. If the above asset is used for any other business by the assessee, if the above asset is used for any other business by the assessee within such period of 8 years, within such period of 8 years, then as per the provisions of section 35 AD subsection 7b, 35 AD subsection 7b, the following amount shall be treated as deemed PGBP income of that specified business. Deemed PGBP income of that specified business. Give a hyphen and in the next line, actual cost of the asset allowed under section 35 AD minus the depreciation, in the bracket write down, on a notional basis, bracket close, for the period for which such asset was actually used for specified business. Full stop. Accordingly, next line, accordingly, comma, now in the next line, accordingly, comma, then in the next line, actual cost of building allowed, actual cost of the building allowed under section 35 AD is equal to how much? 50 lakhs. 50 lakhs. So you have written actual cost of building allowed under section 35 AD. You have written 50 lakhs. Now write down less depreciation at the rate of 10% for previous year 24-25. Sorry, 23-24. Because this was the year only for which the asset was used for specified business. Yes or no? And that will be 5 lakhs. $45 lakhs taxable as deemed PGBP income in Unit A business. Since the above building was used in previous year 24-25. I don't hear unit A business for previous year 24-25. Yes. So since the above building was used in previous year 24-25 for unit B business, that is within 8 years. Done. Give a paragraph and write down the above amount of 45 lakhs, the above amount of 45 lakhs shall now be treated as actual cost of such building in unit B business, as per the proviso to explanation 13 to section 43(1). And below that make one arrow and write down to be claimed as depreciation with effect from previous year 24-25 and onwards, with effect from 24-25 onwards, to be claimed as depreciation with effect from previous year 24-25 onwards from the business income of, fill in the blanks, from the business income of which unit? Unit B. Sure? Full stop. Done. So this is the way in which you are supposed to write down this answer. Okay, no? So what they were asking you, they told you to examine the tax implications which you have examined and given them the answer. Got it, sir? Now come to 11th, illustration number 11. Hmm. 11th, shall we? A firm has paid 8,50,000 as remuneration to its partners for the previous year 24-25 in accordance with its partnership deed. Can I say this is the actual remuneration given to the partner? Is your deed authorizing to pay this? Yes, this is authorized by the deed. Yes or no? And it has book profit of rupees 10 lakhs. See how good your examiner is. He is not telling you to calculate book profit. He himself has calculated that book profit. Now considering that book profit, what is the remuneration allowable as deduction? Come on. See, if they are saying that book profit, sir, book profit is how much, sir? Book profit is 10 lakhs, sir. Did you calculate or it is given in the question? It is already given in the question, sir. Out of this 10 lakh, on the first 6 lakh rupees of book profit, I will calculate 90%, sir. That is 5,40,000, sir. Either this or how much? 3 lakhs. Whichever is higher. So here it will be 5,40,000. How much is the book profit over and above 6 lakh? That is 4 lakhs. So on the balance 4 lakh, how much I will say 60%? That will be 2,40,000, sir. 2,40,000 plus 5,40,000. Therefore, maximum amount of remuneration as per section 40 clause B can be 7,80,000, sir. And remuneration actually paid as per partnership deed. How much is that, sir? 8,50,000. 8,50,000 will be fully allowed, no? Or only 7,80,000 will be allowed out of 8,50,000. So either this or this, whichever is lower. Therefore, allowable remuneration out of 850, how much will be allowed? 7,80,000. And excess remuneration, which is disallowed, will be how much? Out of 850, 780 is allowed. Then how much? 70,000, no? 70,000 will be disallowed. So in the profit of the partnership firm, 850, if it was reduced, I will add back 850 and I will reduce what? 780. Or I can directly add back 70. I can do that also. Very difficult, no question? You'll solve one more question. Come. After 11, come to question number 12. Rao and Jain, a partnership firm consisting of 2 partners. How many partners? 2 partners. Reports a net profit of rupees 17 lakhs before deduction. They are saying before deducting all these 3 items. Yes or no? Now that net profit, if nothing is given, no, I will assume that the net profit given for the firm 17 lakh is calculated as per PGBP provisions. Hello? If nothing is mentioned, I will assume that the net profit given 17 lakhs is calculated as per PGBP provisions. That is not net profit as per books of accounts. That is net profit as per PGBP provisions. Now that net profit is before claiming these 3 amounts. That has to be after depreciation, after allowable interest, but before remuneration. So remuneration is not reduced and you are not supposed to reduce also. Okay. But depreciation is not reduced. You will have to reduce the depreciation. Interest is not reduced. You will have to reduce the interest. But interest is 15%. Don't reduce 15%. Reduce only allowable interest. Yes or no? So tell me, 40,000 salary per month to each working partner. Meaning that 40,000 per month into 2 partners into 12 months will give you 9,60,000 actual remuneration given to the partners. 9,60,000 is the actual remuneration given to the partner. Is it reduced out of 17? No. So no need to reduce also. To calculate book profit, remuneration need not be reduced. Okay. And 1,50,000 depreciation. See how good these people are. They are not telling you to calculate the depreciation. They have themselves calculated and given it to you. If I would have been your examiner, I would have given you the details of assets, blocks, assets bought, assets sold. Yes or no? One block, no, I would have given 2-3 blocks. It's at least computer, plant and machinery, furniture, everything. So you get stuck over there and you forget what you are actually doing. You are calculating the depreciation as per section 32, which is to be allowed to calculate the book profit. So the examiner will always try to do such things. Okay, no? So right now you are very lucky that the depreciation they have themselves calculated and given it to you. But you can be made liable to calculate that depreciation also. Be ready for that. And you know how to calculate that depreciation. Okay, no? So I will reduce this amount. And I will also reduce interest, but which is at 15% per annum. And the amount of capital eligible for interest is 5 lakh. My dear friends, 5 lakh is not interest. 5 lakh is the capital on which 15% interest is given. So the interest actually given is how much? Interest actually given is 15%, which is 75,000. Tell me, is this 75,000 allowable or only 12% is allowable? So I will calculate 12%. 12% should be 60,000. Yes or no? 75,000 was the interest. You have not reduced. Thank God you have not reduced. If you would have reduced 75,000, you would have to first add it. And you have to reduce only the allowable interest. Getting my point? If they would have given in the question that interest already you have reduced while calculating 17 lakhs, interest you have already reduced. So how much interest you would have reduced? 75? No, you would have to add it back. And then calculate 60, reduce 60 separately because that is only the allowable interest. Got it, sir? Now, if the interest is not reduced, they are saying that the profit given is before claiming this interest. So you are safe. That 75,000 you have not reduced because it was not to be reduced also. How much is to be reduced? 60. Now reduce that 60. Getting my point? So tell me, on your calculator, if you take 17 lakhs, out of that, will you reduce remuneration? No. Will you reduce depreciation? Yes. Will you reduce interest? Yes. But only the allowable one, not this one. So how much book profit you are getting on your calculator? 17 lakh minus 1 lakh 50 minus 60. 2 lakh 50 you will reduce. Sorry, how much you will reduce? 60 plus 150, 2 lakh 10,000. 2 lakh 10,000 if you will reduce out of 17, you are going to get 14 lakh 90,000. My dear friends, they are telling you to calculate book profit. Have you calculated your book profit? It is 14 lakh 90,000. Okay. Now, based on this book profit, they are telling you to calculate what? Allowable remuneration. What did I say? Allowable remuneration. Meaning that first you are supposed to calculate book profit. Book profit you have calculated. How much? 14 lakh 90,000. Yes or no? So I will write down 14 lakh 90,000 was your book profit. Out of that, on the first 6 lakh, you will calculate 90%. That is 5 lakh 40 or 3 lakh, whichever is higher. 5 lakh 40 is fixed. Now, how much is the remuneration over and above 6 lakh? It is, sir, 8 lakh 90,000, sir. 8 lakh 90 only, no? 60% of 8 lakh 90. 60% of 8 lakh 90 will be 5 lakh 34,000, sir. Now this 5 lakh 34,000 plus 5 lakh 40 both taken together will give you 10 lakh 74,000. This is 10 lakh 74,000. Can I say this is the maximum amount of remuneration which you can claim? So here I will write 10 lakh 74,000. Okay. Now this 10 lakh 74,000, how much actual remuneration you have paid to the partners? 40,000 into 2 into 12 is 9 lakh 60,000. Now tell me, whichever is lower is 9 lakh 60. is there any interest which will be, is there any remuneration which will be disallowed? The answer is no. Because the entire remuneration you are paying is within the limit of that 10,74,000, fully allowed. Nothing will be disallowed. See, I just have to know the format. I just have to put the amounts. Now, should I give you one more question in this? In the same question, if they tell you to calculate the taxable PGBP income of the firm, come on, calculate. What should be the taxable PGBP income of the firm? Taxable PGBP income of the firm. Very simple, sir. Very simple. Whatever remuneration which you have calculated right now, no, allowable remuneration. From your book profit, reduce that amount, you are going to get the PGBP income of the firm. Or do one thing. What is this? Net profit of the firm. If nothing is given, it is assumed as per PGBP provisions. So as per PGBP provisions, what was the net profit? 17 lakhs. Now, to calculate the PGBP income of the firm, you will have to take the deduction for what? Interest on capital. And that will be how much? 12% of 5 lakhs. Allowable interest. So it will be 60,000. Then less remuneration to partners calculated as above. How much remuneration allowable? Allowable. That is, sir, entire 9,60,000 is allowable. Because that was within the limit of 1074. Yes or no? So to calculate the PGBP income of the firm, this will be allowed as a deduction, no? So claim it as a deduction while calculating PGBP income. And one more thing you are supposed to claim as deduction. What? Depreciation under section 32. That is given. How much? Tell me. 1,50,000. Now take these all deductions and tell me how much is the total. 1,14,000. 17 lakh minus 60,000 minus 9,60,000 minus 1,50,000. How much is the final amount? 5,30,000. 530, no? That 5,30,000 is, please check properly, huh? This is the taxable PGBP income after claiming all deductions and allowable remuneration. This can be asked extra. So now please pay attention. In the examination, no, they will form a case study like this. In your MCQs, a case study will be made. In that case study, all these details will be given. Also the depreciation details will be given. Now 4 to 5 MCQs will be formed based on this case study. One from the point of view of the partner will also be made. These two and this extra, third. How much is the book profit of the firm? 4 options. How much is the allowable maximum limit of remuneration? Second, 4 option. Third, how much will be the taxable PGBP income of the firm? This one. And last but not the least, they will ask you how much will be the taxable remuneration in the hands of partner. Getting my point? 2 marks each, 8 marks. If you know this properly, no, you will score full marks. But if you don't know, and in that question, they are going to give you the details of depreciation also. And now they will give you one more. What? MCQ. In that they will tell you that what is the depreciation under section 32 allowable in the hands of partnership firm. So based on those details, they will check that whether how good you are in the depreciation calculations also. 4 options. two options will be very similar. Getting my point? Okay. So pay attention. Delta Limited credited the following amounts to the account of resident payees. Delta Limited credited the following amounts to the accounts of following resident payees. Meaning that Delta Limited is giving money, paying, making the payment for there might be some expenses. So following two expenses are there. For that, the accounts of the payees, resident payees are credited. Meaning what? Following amounts to the account. Credited means in the books of accounts of the Delta Limited. This credit was given. Okay. In the month of March 2025, and this was given without deduction of tax. Meaning that on this also, no TDS was deducted. Okay. What would be the consequence of non-deduction of tax at source by Delta Limited on these amounts during the financial year 2024-25? Assuming that the resident pays in all the cases mentioned below have not paid the tax, if any, which was required to be deducted by Delta Limited. Okay. Salary to its employees, Mr. X, credited and paid in the month of March 2025, it is 12 lakh rupees. Director's remuneration credited in March 25 and paid in April 25. Both the payments are made in payments are made in April 25, meaning next year, and they are credited in the books of Delta Limited in the month of March 2025, meaning this year. Now, later they are saying that would your answer change if Delta Limited has deducted tax on director's remuneration in April 25 at the time of payment and remitted the same in July 25? For this, we'll have a discussion little later. Okay. Now, first of all, this question is a very good question which combines two concepts together. Concepts of TDS and concept of disallowance. See, I have not yet taught you TDS chapter. Okay. But whenever I am going to tell you, whenever we are going to study that together, that time I am going to tell you something over there. Okay. And what is that something which I am going to tell you over there? I am going to explain a little bit about that right now. Okay. Pay attention. See, if there is an employer, no? If employer makes the payment of salary, employer gives the salary to employees. Now, the employee can be a resident, employee can be a non-resident, no problem in that. Employee can be resident also, non-resident also. Whenever the employer will give salary, for employer it is an expense which the employer will claim as a deduction under PGBP head. Sure. For employer, it is a PGBP expense. Employer will claim this as a deduction under PGBP. And for employee, it is his salary income, which the employee will show under the head salary. Now, on this salary, the employer is required to deduct TDS. On the salary, employer is required to deduct TDS as per section 192. There is one section 192. In TDS chapter, we are going to learn this section in detail. Okay, no? But right now, I'm just giving you basic idea about section 192 so that we are able to solve this question, which is we are doing right now. Okay. So, employer is required to deduct TDS under section 192. And as per section 192, the provisions of section 192 says that if taxable salary given to the employee is greater than his basic exemption limit. Basic exemption limit. Then on the amount of this taxable salary, tax is to be deducted at normal rates which are applicable to the employee. So the rates of tax, normal rates of tax which are applicable to the employee, by applying those rates, the employer will calculate the amount of TDS. So that on the taxable salary of the employer will apply the normal tax rates applicable to the employee, and by applying those normal tax rates, the tax amount will be calculated and that tax will be deducted from the salary of the employee at the time of payment or credit, whichever is earlier. For all the payments under TDS chapter, no, majority of the payments you will see that the TDS is to be deducted at the time of payment or credit, whichever happens earlier. At the time of payment or credit, whichever happens earlier. What did I say? At the time of payment or credit, whichever happens earlier. Meaning that in my books, whenever I will give the credit at that time, or when I will make the payment of that expense that time, whichever happens earlier, at that time I have to deduct TDS for all the payments which are given in TDS chapter. Okay, no? But for few payments there is an exception, and salary is one of those exceptions, where it is said that under section 192, whatever TDS is to be deducted on the taxable salary of the employee at the rates, at normal rates applicable to the employee, will always be deducted at the time of payment of that salary. Hello sir, did you understand this much? So if I am your employer, I am giving you salary. Your taxable salary is what? Your taxable salary is more than your basic exemption limit. So section 192 tells me that I should deduct TDS at the normal rates applicable to you. By applying that rate, I will calculate your tax, and that tax I am going to deduct from your salary when I will pay that salary to you, not when that salary I will credit in my books. Getting my point? Hello sir. Now the calculation and everything in detail we are going to study in section 192. But this is the basic thing. This is the basic requirement which you should be aware about. So when the TDS is deductible, come on, when you are liable to deduct, when you are giving taxable salary of more than basic exemption limit. Now in our case, go and check. Delta Limited is the employer giving how much salary? Taxable salary of 12 lakh rupees. Is it more than the basic exemption limit? Yes or no? Is it more than basic exemption limit? 12 lakh is more than basic exemption limit of 2 lakh 50. No. Assuming that the employee, Mr. X, to whom the salary was given, he was not a senior citizen. So he was a normal individual. For him, the basic exemption limit was 2 lakh 50. Are you making a payment of salary more than 2 lakh 50? Yes. You are liable to deduct TDS. But the question says that on the following payments, including this salary, no TDS was deducted. So if you are liable to deduct TDS, no TDS was deducted, Do you remember? One disallowance gets attracted, 40AI or 40AIA or 40A3. Which disallowance will be attracted over here? Guys, 40AIA will be attracted. Why, sir? Because the payment is made to resident payees, meaning that Mr. X is a resident. So any salary or any other expense incurred for the purpose of business or profession, for that, if the payment is made to a resident, which is happening right now, on that I was supposed to deduct TDS. Yes or no? I was supposed to deduct TDS, sir. When the liability of TDS arises at the time of payment or credit, whichever earlier, but in the case of salary, it arises at the time of making the payment, sir. So when the salary is paid, hello, when the salary is paid, please check. The salary is credited as well as paid in the month of March 2025 itself. Hello, sir. So the TDS was required to be deducted in the month of March because the salary is paid in the month of March. Did you deduct that TDS in the month of March? The answer is no. So if section 192, that is TDS under section 192, is required to be deducted, yes sir. On salary, TDS under section 192 is required to be deducted at the time of payment, meaning when the TDS was required to be deducted in the month of March 2025. So the TDS was required to be deducted in the previous year 24-25 only. At the time of making the payment, did you deduct that TDS? Did you deduct that TDS in 24-25? No. Meaning that now on this 12 lakh, a disallowance will be attracted under section 40 AIA. And as per that disallowance, the entire payment cannot be claimed as a deduction. 30% of that payment will now be disallowed. So how much will be 30% of 12 lakh? It will be 3 lakh 60. So Delta Limited cannot claim a deduction of full 12 lakh salary. 3 lakh 60,000 salary will be disallowed. Got it, sir? Later on, if Delta Limited deducts this TDS on the salary of the employee, then whatever 3 lakh 60 which was disallowed right now will be later on allowed as a deduction in the year in which the TDS got deducted and paid to the government. Hello, sir. TDS to be deducted in this year only and deposited also in this year or on or before the due date of filing ROI of this year. Meaning it was supposed to be deducted in this year only, sir, but it was not deducted in this year. Forget about depositing, it was not deducted only. So if the TDS was not deducted, whatever payment which is made to the resident payee will be disallowed. But it will not be disallowed fully, it will be disallowed to the extent of 30% only for TAI. Will you remember this? Sure, sir. But first we'll have to find out that whether the TDS is supposed to be deducted or not. And when it was supposed to be deducted. That time it was deducted or not. If deducted, then it was deposited or not. All these questions you have to seek answers. And if you seek answers to all these questions, if all the questions are ticked, yes, 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 then only you can claim the business expense as what? Deduction in this year. Otherwise, 40AI, 40AIA, 40A3, these disallowances for default of TDS gets attracted. Sure, sir. Now the second payment is made and that second payment is director's remuneration. See, this section which I told you, no, about the salary, this was section 192. So as per the provisions of section 192, TDS is to be deducted on the salary. Whether that salary is payable to a resident, whether that salary is payable to a non-resident, will not make any difference. TDS will be deducted on the salary as per section 192 only. Yes or no? Everyone, now pay attention. There is one section, section 194J, which says that if you are any person Any person means any person. Okay, no, you can be individual, you can be HUF, you can be AOPBI, you can be any person. You are making payment. You are making a payment of what? 5 things. A, professional fees. B, fees for technical services. C, royalty. D, non-compete fees, which was given under the head PGBP under section 28 clause 5, if you remember. Non-compete fees, yes or no? And last but not the least, director's remuneration. Now these are few amounts, these are few of the payments, and these payments are made to any resident person. Sir, what if these payments are made to a non-resident person? Then the TDS provisions are different. Whatever TDS provision which we are going to discuss right now, this TDS provision for this payment which we are going to discuss, if it is paid to a resident, so any person can make these payments to any resident person. So can I say this person is a payer, this person is a payer, and this person is a payee. So payer is making following payments. Number 1, which payment? Professional fees. Number 2, fees for technical services. Number 3, royalty. Number 4, non-compete fees. Okay, now pay attention now. 1, 2, 3, 4. Sir, 1, 2, 3, 4. Very good. Then 5 also, no? No, only 1, 2, 3, 4. 1, 2, 3, 4. If payment during the previous year for any of these expenses, for any of these payments, if the payment during the previous year to this resident person is more than rupees 30,000. So first of all, you are supposed to check that to that resident person, whatever professional fees you are paying during the year, aggregate of that professional fees paid during the year to that resident person, if it is more than 30,000, then this person is liable to what? Deduct tax. Liable to deduct TDS under section 194J. And deduct TDS. When you are supposed to deduct TDS? At the time of payment or at the time of credit of such sum, whichever happens earlier. Now this will be required to be deducted when the credit is made in my books or when I am making the actual payment, whichever happens earlier. But the TDS will be required to be deducted. Hello. TDS will be required to be deducted at any time during the previous year. No, at the time when the payment was made or at the time when this payment was credited in my books, whichever happens earlier, but it will be required to be deducted only if the payment is more than, aggregate payment is more than 30,000 for these 4 amounts. Now for the last one, no, director's remuneration. Any amount. Any amount means there is no restriction of 30,000. Even if the director remuneration paid is 5,000, TDS is to be deducted. Even if the director's remuneration paid is 20,000, still the TDS will be deducted. If it is 30, then also TDS. More than 30, then any amount of director's remuneration paid during the relevant previous year, on that amount, the TDS must be deducted at the time of payment or credit, whichever happens earlier. The rate of TDS and everything is prescribed in 194J, that we are not supposed to concentrate. Okay. Now tell me, which fees, which of these 5 amounts is given in the question? Come on. They're talking about director's remuneration. For that, was there any limit of 30,000? No. So whatever director remuneration paid in this year, 28,000, or credited in this year, paid or credited, whichever happens earlier. So the payment is made in the next year. See, April. And the credit in my books, the company has given the credit in its books in the month of March. So March or April, whichever happens earlier. So in the month of March only, at the time when this remuneration was credited in the books, at that time only the company should have deducted the TDS. Meaning, first question, is the provision of section 194J applicable? The answer is yes. Provision of 194J is applicable. As per 194J, the TDS needs to be deducted on this payment. Yes or no? Because payment is specified under section 194J and that payment is made to whom? Made to a resident. And the amount for this payment is not specified. So whatever amount of payment is made, I have to deduct TDS. So now I am confirmed that TDS was supposed to be deducted. But have you deducted the TDS? No. When that TDS was supposed to be deducted? March or April, whichever happens earlier. March credit, April payment. March credit, April payment. Whichever is earlier. March 25 only. So TDS was supposed to be deducted in this year only. Did you deduct the TDS in this year? The answer is no. Then whatever payment made on which the TDS was supposed to be deducted but not deducted, that entire payment will be disallowed. No. 30% of that payment will be disallowed because the payment is made to resident. Hello, sir. Hello, sir. So how much payment made? 28,000. On that, have you deducted TDS in the month of March? No. So this payment will be allowed. Yes, this will be allowed to the extent of 70%, but 30% of this payment, meaning 8,400, will not be allowed as a deduction in the previous year 24-25. Now, whenever you will deduct that TDS of 194J and you will deposit, at that time this 8,400 will be allowed in that year. In the year in which the TDS on this payment was deducted and deposited. Hello, sir. Will you remember? So, I have given you 2 sections, details which we are going to study in TDS provision. These details were required in order to understand whether the TDS was required to be deducted or not. So, first of all, first payment is what? Come on, tell me. First payment is salary to Mr. X, rupees 12 lakhs. Mr. X is a resident. So 12 lakh salary was payable to this resident. Okay. On this TDS under section 192 must be deducted at normal rates applicable to Mr. X at normal rates applicable to Mr. X since his salary exceeds his basic exemption limit. Okay, no? TDS under section 192 was required to be deducted at the time of payment of such salary to the employee, that is in March 25. Okay. Now, since no TDS under section 192 was deducted by Delta Limited, therefore 12 lakh into 30% is equal to 3 lakh 60,000. This much amount is disallowed under section 40 AIA in the previous year 24-25, because in that year only the TDS was required to be deducted. Will you remember this thing? Will you be able to write like this? Okay, no? 2 mark small question can come like this on the concept of TDS. Sure? So for the second payment, can you write down like this? Okay, second payment was director's remuneration. Write down. Director's remuneration. To whom it was given? No name given. Okay, no problem. Director's remuneration was how much? Rupees 28,000. On this, TDS must be deducted under section 194J and irrespective of amount, irrespective of the amount of such remuneration. So that TDS shall be deducted in at the time of payment, meaning April 25, or credit, meaning March 25. Whichever happens earlier, that is in March 25. Sure, no, sir? Since no TDS under section 194J was deducted by Delta Limited. Okay. So what we will do now? 28,000 into 30% is equal to 8,400. This amount will now be disallowed under section 40A IA in previous year 24-25, because this was the year in which the TDS was supposed to be deducted. Okay. Question is very easy. Why we could not crack, in the very beginning? Because we were not aware about the TDS provisions. Once you are aware about TDS provision, and if you mix TDS provision with this chapter, no, you'll easily be able to identify, oh, TDS section we have already studied. As per that section, the TDS is deductible or not? Yes, deductible. Then it was deducted? No, disallowance will be attracted. Now the only one consequence will be there? No. If assessee does not deduct, let me change, does not deduct TDS or deducts TDS but fails to deposit on time. Sure, no? If this thing happens, then assessee will be treated as assessee in default. Now this type of assessee is known as what? Assessee in default. And once he becomes assessee in default, interest under section 201 is charged from him for becoming assessee in default. So what will be the consequence? They are asking you, what are the consequences for non-deduction? Number one, consequence for non-deduction is payment will be disallowed under PGBP head. How much? 3,60,000 and 8,400. And the second consequence is assessee will be treated as assessee in default. Because whenever he does not deduct, or if he deducts but does not deposit, that time he is treated as assessee in default, and from him an interest under section 201 is charged. So this will be the second consequence. Getting my point, everyone? Now pay attention, huh? Very important thing I am going to tell you now. If you don't deduct TDS, no, you become assessee in default and interest under 201 is charged. Or what is the second case? You deduct TDS but you don't deposit on time, then also you become assessee in default and interest under 201 is charged. Yes or no? So out of these two cases, no, TDS not deducted, then you become assessee in default. Second case, TDS deducted but not deposited on or before the time, then also you are treated as assessee in default. In both the cases, 201 assessee in default, interest is to be paid. But wait, we are not talking about two cases now, we are talking about only the first case. What was the first case? Come on, tell me. Assessee has not deducted TDS. Will he be considered as assessee in default? Yes. Will there be any interest liability under 201? Yes. But there is one exception, that if the assessee, what did I say? If assessee does not deduct TDS, I'm not writing anything after this. or deposit deducts but fails to deposit. I'm not writing that. I'm writing only does not deduct TDS. Okay. Then the assessee will be treated as assessee in default and interest under section 201 is levied. Yes or no? But wait. Even if the assessee has not deducted TDS, still he will not be treated as assessee in default. If all the following conditions are satisfied. First one, payee, meaning the person to whom the payment was made. Yes or no? Payee has filed his return of income under section 139(1). Payee has shown such income in such return ROI file, and payee has paid the tax on the entire income shown in such ROI. And the payee has done all these things. Payee has done all these things. Then assessee will have to prove this. If the assessee is able to prove that, see, what if we have not deducted TDS? The payee has already filed his return, and in that return the payee has shown this amount which I am giving to him. The payee has shown that amount as his income, and whatever income which has shown in return of income, including this income, on that entire income the payee has paid the tax. So definitely the tax which I was supposed to deduct, which I could not deduct, he has paid to the government, no? Because he has shown this income in his return, and in his return whatever income was there, including this income, on that whatever tax was coming, he has himself paid it. If the assessee is able to prove this thing, these 3 points, then the assessee will not be treated as assessee in default and interest under 201 will not be charged. But wait, disallowance will be attracted. Disallowance cannot be denied. Did you deduct TDS? No. So that payment will be disallowed. Hello? Either 100% under 40AI or 30% in 40IA. The payment will be disallowed. There will be no effect on disallowance. But you were going to be assessee in default. You were supposed to pay interest for becoming assessee in default. Now that interest we will not charge because you are proving this thing. But that does not mean that the expense we will allow. The disallowance will still be attracted. Yes or no? Hello, sir. Now how the assessee will prove this? The assessee will have to take a certificate from a practicing chartered accountant who will certify these things. Say thank you to the Income Tax Act. Say thank you, Income Tax Act. Say no. Why? Because after becoming a chartered accountant, if any of your clients tell you to make such type of certificate, as a practicing chartered accountant, you will make this type of certificate for him. Government will not believe on the assessee. That assessee is saying that payee has filed return, shown income, hello, paid the tax on the entire income. So now please don't consider me what? Assessee in default. Why would we believe you, boss? You are not the person to be believed upon. So give us some evidence based on which we can believe you. So the department believes on good people, practicing chartered accountants. So if the assessee takes a certificate from the practicing chartered accountant regarding all these things, yes or no? That means now it is proved. Now the department will believe me that okay, if the CA has certified, then we have to believe only. CA is only in his certificate saying that the payee has filed his return. In that return, this amount was shown as his income on which TDS was not deducted, and on his entire income shown in the return of income, including this income, whatever tax was there, that entire tax payee has paid. If a practicing chartered accountant, what? If the practicing chartered accountant certifies this, then assessee who did not deduct TDS will not be treated as assessee in default. That's it. In that case, he will not be treated as assessee in default. Meaning 201 interest will not be applicable. But wait, this certificate can be given only if there was no tax deduction. What if tax you have deducted but not deposited? This is not small papam. This is ghor papam. Aghor papam. Big sin which you have committed. Meaning that you deducted the tax by taking our name, and now you are enjoying with our money and telling us not to consider you assessee in default. No, boss, you will be treated as assessee in default. First, disallowance will be attracted, and then you also will be treated as assessee in default. Now, this type of certificate you cannot bring. See, he has paid, no, this, no, that, no. He has paid, but you have deducted, and it is money lying with you. You have not yet deposited that money to us. So for what reason you are giving us this certificate? Hello? This certificate can be given only if the assessee does not deduct TDS. Okay? Now tell me one thing. Last payment, can you see? Second payment. Director's remuneration. When the TDS was supposed to be deducted? March, no? In the next two lines they are saying, would your answer change if Delta Limited has deducted tax on director's remuneration in April 25 at the time of payment and remitted in July 25? No, my answer would have been same. Because the TDS was supposed to be deducted in the month of March. Did you deduct in the month of March? No. 40 IA will be attracted and 8,400 will be disallowed in this year. Hello, sir. Okay. If the TDS is deducted in the next year now, in the month of April, and it is deposited also in the next year, then the amount of 8,400 which was disallowed right now will be disallowed only. Right now, in 24-25, it will be disallowed. But later on, it will be allowed as a deduction in the previous year, 25-26. Because the TDS was deducted and deposited in 25-26. So the 8,400 amount which was disallowed right now will be allowed as a deduction in 25-26, proviso to section 40 IA will get attracted. But in this year, 8,400 will be confirmed disallowed. Hello, sir. Will you remember this? This was your question number 9. Okay. So, would your answer change? Write down. No. Still 28,000 into 30%. is equal to 8,400 will be disallowed under section 40A IA in previous year 24-25. However, TDS was deducted and deposited in previous year 25-26. Deducted in April 25, deposit in July 25. Yes or no? That is in previous year 25-26. Therefore, as per the proviso to section 40A IA, 8,400 will now be allowed in previous year 25-26. That is the year in which the TDS is deducted and deposited. Don't worry, these type of questions they are not going to ask in theory. Even if they are asking, such type of questions will be very easy only. Okay. So tell me, did you understand? Should I move ahead? Sure. Come to question number 10 now. You start. Did you try this question at home? You tried it. Now wait. Before you start this, no, I will give you some basic idea, basic, detail of TDS provision, which will be helpful to solve this question. Sure, no? Wait. See, under the TDS provisions, no, if the pair is there, pair, that pair is making the payment of under section 194A interest other than interest on securities, 194A. Then 194C payment he is making, payment for contract fees. Then 194 DEFGH, commission and brokerage. Other than 194, don't write down that other than over here. Okay, we'll see later on. 194 I rent and 194 J payment A to payment E discussed above. Do you remember? 5 payments of 194J we discussed above. These 5 payments. Yes or no? Yes, these 5 payments. Can you see? These 5 payments of section 194J. Okay. And there is one 194R also. Okay. That is perquisites in the course of business or profession. Now any of these payments What did I say? Any of these payments, again, any of these payments are made to any resident person. Any resident person means the payee is a resident. Okay. Then under these sections, the TDS are supposed to be deducted. Okay. You are supposed to follow these provisions. You are supposed to follow the provisions of 194C to deduct TDS on contract fees. You are supposed to follow the provisions of 194I to deduct TDS on rent. Okay. So then these provisions will be applicable on you and you will be liable to deduct what? TDS as per these provisions. But wait, if the payer is an individual, if the payer is an individual or HUF whose last year, in the last previous year, his business turnover did not exceed 1 crore and his professional gross receipt or his professional gross receipt did not exceed 50 lakhs. I am talking about a payer. I am talking about a payer. Who is that payer, friends? That payer is either an individual or that payer is HUF. That payer is making these payments in this year. Hello, sir. This type of payer making these type of payments in this year to any resident pay. This year the payments are made. Who is making the payment? An individual or HUF whose last year business turnover was not more than 1 crore. Whose last year professional gross receipt was not more than 50 lakhs. Such type of individual, such type of HUF is making the payment, these payments in this year. Yes or no? Then for this type of payer, above provisions for tax deduction are not applicable in the current previous year. Not applicable in the current previous year means what? Meaning that even if this payer making these payments to resident, even if there are TDS provisions telling you to deduct TDS, please don't deduct TDS. You are not required to deduct TDS because you are such type of payer. Hello? Any other payer making these type of payments, for them you are not supposed to see. Hello? For them you are not supposed to see these limits. Any other payer making these type of payments to resident person, they have to compulsory deduct TDS. But only an individual or HUF whose last year's business turnover was not more than 1 crore, whose last year's gross receipt from the profession was not more than 50 lakhs, that type of individual or HUF, if making these payments in this year to any resident payee, then for them, this section this year are not applicable. Meaning, they are not liable to deduct TDS on these payments. Now tell me, if you are such type of individual or HUF and if you have made these type of payments in this year, hello, and you have not deducted TDS, will there be a TDS default? The answer is no. There cannot be a TDS default if I am not liable to deduct TDS. I am liable to deduct, I did not deduct, or I deduct and did not deposit on time, then there is a TDS default. But if I am not liable to deduct only, and hence I have not deducted and deposited the TDS, you cannot tell me that I have committed a TDS default. Yes or no? So are you liable? No. So don't deduct. Even if you will not deduct, these expenses will be allowed as a deduction to you. It will not be disallowed. No for TAI, no for TIA, no for Tier 3, etc. Getting my point? Sure? Now, approach this question. Come on, start. During the financial year 2024-25, the following payments or expenditures were made or incurred by Mr. Raja. Okay. So, Mr. Raja is making the payment, meaning he is the payer. He is the payer. Payer is an individual. Yes or no? Payer is an individual. Yes. Now, whose turnover during the year ended 31st March 24, meaning the turnover of the business of Mr. Raja during the last year was 99 lakhs, meaning less than or equal to 1 crore. Now, whenever in this year, Mr. Raja will make these payments to residents. Raja may or may not be resident. We are not supposed to see that what was his residential status. We have to see that what was the residential status of the payee. So to the payee is a resident. And if he is making these payments to resident payee during the year, he will not be liable to deduct any TDS. Understanding? But if any other payments made by him, on those payments he will be liable to deduct TDS, provided the TDS provisions are fulfilled. Okay. Now, the first payment they are talking that interest of 45,000 paid to Rahman and Company, a resident partnership firm without deduction of tax at source. See, he has paid some interest to any partnership firm, and that partnership firm is a resident. See, I told you the payee can be any person but has to be a resident. So payee can be a partnership firm? Yes. A resident? Yes. To that payee, to that partnership firm, he was paying an interest. This is not interest on securities. This is any other interest. Interest on securities means interest on debentures, interest on government securities, interest on bonds, etc. Other than interest on securities, whatever interests are there, they are covered in section 194A. And 194A says that if the payment of interest during the previous year in aggregate is more than 5,000, if payment of interest other than interest on securities during the previous year in aggregate it is more than 5,000, then you have to deduct TDS from that interest, provided the payment is made to resident payee. Is this interest paid to resident payee? Yes. Is the aggregate amount of interest more than 5,000? Yes. See, in certain cases, there will be a limit of 40,000 and 50,000 also in 194A. So, I'm not getting you involved in those things. The basic limit is what? 5,000 only for that interest. So, is that interest more than 5,000? The answer is yes. TDS is required to be deducted? The answer is yes. So, if the TDS is required to be deducted and you have not deducted, then the interest will be disallowed. But sir, you are a payer who is an individual whose last year turnover does not exceed 1 crore. So even if you are making the payment of this interest which is more than 5,000, you are not required to deduct any TDS. So 194A TDS provisions are not applicable on you, Mr. Raja. Hence, you have not deducted TDS. Have you done something wrong? Have you done something wrong? No. Have you committed a default of TDS provisions? No. So you are not treated as assessee in default also. And for you, the interest which was expense will be allowed as a deduction. Hello, sir. So this interest will be allowed in the hands of Raja. Did you understand? Sure? Okay. Now, coming to the second payment, Raja is making the payment of salary, hello, to a resident individual. For that, please don't see what was the turnover during the last year, what was the gross receipt of the profession in the last year. To make the salary payment, you are not supposed to see such things. So are you paying the salary to any resident or non-resident? Yes, sir. How much is that salary? Sir, 10 lakhs, sir. Is the amount more than the basic exemption limit of that person? Yes, sir. Are you liable to deduct TDS? Yes, sir. At the time of payment or credit, whichever is earlier? No. At the time of making the payment of that salary. But did you deduct that TDS? No. The TDS under section 192, you are liable to deduct in this case. But did you deduct? No. Entire salary paid without deducting TDS would have been disallowed if the payment would have been made to a non-resident. Hello, sir. As per 48(3). But is the payment made to a non-resident? No. The payment is made to a resident. Then the entire salary on which the TDS was not deducted will not be disallowed. Only 30% of that amount will be disallowed. So can I say 192 TDS provision was applicable, but you did not deduct TDS as per the provisions of 192 on the salary. Hence, the salary will be disallowed to the extent of 30% under section 40A IA. Hello, because the payment was made to a resident. Done, sir. Next one. Commission is 194H. Can you see 194H in that list? Can you see? See, for commission what happens? 194H says that whenever the commission is given to a resident during the previous year and the aggregate amount of that commission given to the resident exceeds 15,000 rupees, exceeds 15,000, then as per 194H, the TDS must be deducted at the time of payment or credit, whichever happens earlier. And the rate of TDS is 5%. Getting my point? So tell me, is the payment made more than 5,000? Yes, sir. So were you liable to deduct TDS? No, sir. 194H not applicable on you because you are an individual whose last year's business turnover is not more than 1 CR. So this year, even if you are making the payment of commission more than 15,000, 194H provision not applicable on you. You are not liable to deduct any TDS on this amount. Hence, you have not deducted. So will that commission be your allowable expense? Yes, it will not be disallowed. It will be allowed as a deduction. And further, you are not treated as assessee in default also in this case. Briefly discuss whether any disallowance arises under the provisions. Assuming that the payee in all cases mentioned above has not paid the tax. So if the payee has not paid the tax and you forget to deduct the tax, first of all, 40 IA, that amount will be disallowed, 30%. And second, you will also be treated as assessee in default because payee has not paid that tax. Getting my point? Sure, sir. So this is question number 10. So till question number 10, everything is over. Tell me yes or no. All the questions done. 11th also done. Please check. 11th also done. Then 12th is also done, sir. Come to question number 13. I think that question number 13 is not done. Illustration number 13. We have not done it, no? Okay. Let's do it now. X Limited contributes 20% of basic salary to the account of each employee under a pension scheme referred in section 80CCD. So the pension scheme which is referred in 80CCD, the name of that pension scheme is NPS, National Pension Scheme. Okay. So X Limited employer contributing 20% of basic salary of their employees to the NPS account of the employee, meaning contribution by the assessee to the NPS account of employees. This is expense. Getting my point? Which will be allowed as a deduction under section 36 subsection 1 clause 4A. So the deduction for this expense will be available to X Limited. under section 36 subsection 1 clause 4a. But remember, the deduction allowed under clause 4a cannot be more than 14%. There is an amendment here. Cannot be more than 14% of salary of the employee. 14% of basic salary? No, 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 no. 14% of salary of the employee. And in that salary, basic and DA in terms of the employee has to be taken. So when you will be calculating 14%, will you take only basic salary? No, 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 no. You have to take the salary. And salary for that purpose means what? Basic and DA in terms. So, there they are saying dearness allowance is also given to the employees, which is 40% of their basic salary, and it forms part of the pay of the employee, meaning that the DA which is given to the employees is DA in terms. The DA which is given to the employees is what? DA in terms, which will be given 40% of the basic salary. Yes or no? Now, compute the amount of deduction allowable under section 36(1)(4)(a). If the basic salary of employees aggregate to 10 lakh, would disallowance under section 40(a)(9) be attracted? If so, to what extent? Pay attention. Assessee. Assessees, meaning employers, contribution to NPS account of his employees. How much is contributing? 20% of basic. This is actual contribution which the employer is making. Yes or no? So 20% of 10 lakhs, which is equal to 2 lakh rupees. 2 lakh rupees. So this is 1. And 2 is maximum contribution that can be made to employees' NPS account by the assessee, who is what? Employer, is equal to there is an amendment over here. So it is not 10%, it is 14% from now onwards. 14% of what? Salary. And sir, the salary will be basic plus DA in terms. Sir, basic is 10 lakhs and DA in terms is 40% of 10 lakhs. So that will be 4 lakh plus 10 lakh will give you 14 lakhs, no? Yes. So 14% of 14 lakhs you will calculate now. That will be 1,96,000 every one. This much amount should be contributed. This is the maximum amount which the employer can contribute. How much is contributing? 2 lakhs. So therefore, contribution up to rupees 1,96,000 and contribution in excess of 1,96,000, that is rupees 4,000. Okay. So contribution of 1,96,000. What should I do? This will be allowed, and in excess of 1,96,000, 4,000 will be disallowed. Will you remember this? This is allowed under section 36 subsection 1 clause 4A, and this is disallowed under section 40A subsection 9. Sure, sir? Should we move ahead? So question number 13 also done. Let's go to the next question. Question number 14, please check. Have we done question number 14? We have done it? No. So we are going to do this question also. Very good question. Don't mark it important. This is a good question. This will test you on 43B. Remember yesterday we were doing section 43B. Last 3 important points I discussed with you. First point, loan which you took from the bank. No. Specified lenders. PFI, SFC, SIIC, yes or no, etc. Specified lenders, you are taking a loan, and now that on that loan you were supposed to pay interest. Last 3 years interest you did not pay. 2 lakh, 1 lakh 50, 1 lakh, total 4 lakh 50 you did not pay. So that was not allowed. As per 43B, such interest for last 3 years were disallowed. Now the bank is rescheduling the loan. Your loan tenure increased, your loan rate, reduced, and bank is asking you what to do about this 4 lakh 50 interest which is remaining. You told convert it into loan, and now you are saying, oh, on conversion of this loan of the last 3 years it is paid, and you are trying to claim the deduction. Will you get it? No. Conversion of interest payable which was already disallowed, that conversion of that interest into loan will not be treated as actual payment. So in the year of conversion it cannot be claimed as deduction. Do you remember? Now this loan, interest which was converted into loan, the year in which this loan will be paid, no. In that year, this loan is nothing but interest paid. In that year, that much amount of interest will be allowed. Do you remember that point? Same point is given in this question. Let's start. Hari, an individual, carried on the business of purchase and sale of agricultural commodities. He is in the business of purchase and sale of agricultural commodities like paddy, wheat, etc. Okay. He borrowed loans from Andhra Pradesh State Finance Corporation, APSFC, a state finance corporation. From SFC, a loan was taken for the purpose of business. And also a scheduled bank. Indian Bank is a scheduled bank, yes or no? SBI, Bank of India, Punjab National Bank, HDFC Bank, likewise Indian Bank is also there. These banks are scheduled banks. So a scheduled bank is there. From the scheduled bank also the loan is taken, and a state finance corporation is there. From the state finance corporation also a loan is taken for the purpose of business. Okay. And on those loans has not paid interest as detailed below. So this much interest was supposed to be paid, but it is not yet paid. To Andhra Pradesh State Finance Corporation, last year and this year interest 15 lakhs not paid. To Indian Bank, this year interest 30 lakh rupees not paid. See, last year's interest shall be paid in last year or on or before the due date of filing ROI of last year, which was not paid. And this year's interest also should be paid in this year or on or before the due date of filing ROI of this year. It has to be paid, which is not paid only. Understanding? So last year as well as this year's interest of a state finance corporation is not paid, and this year's interest of the scheduled bank is not paid. Now what you are doing? Both APSFC and Indian Bank, while restructuring the loan facilities of Hari during the year 24-25, converted the above interest payable by him to them as a loan, repayable in 60 equal annual installments. Meaning both the lenders, specified lenders, in this year converted that loan, converted that interest into loan. So can you say last year's interest paid in this year? Why? Because it is converted into loan. Can you say this year's interest paid in this year? Why? Because it is converted into loan. You cannot say. So converting these loans in this year into another loan is not a payment of these interest. Hello sir, check. Hari paid 5 installment of State Finance Corporation and 3 installments of Indian Bank. The loans were repayable in 60 equal installments. Meaning this was converted into a 15 lakh rupees loan to be repaid in 60 installments. So 15 lakhs divided by 60 will give you 25,000. And that 25,000 multiplied by 5 installments paid in this year. Getting my point? First of all, entire 15 lakhs converted. Entire 30 lakhs converted in this year. Will it be treated as payment of interest? No. So that 15 lakhs or 30 lakhs will not be allowed as a deduction in this year because it is not paid yet. Now out of that 15 lakhs, you are paying 5 installments. This 15 lakhs was payable in 60 equal annual installments. 60 equal installments. Out of 60 installments, 5 installments are paid in this year. So to the extent of that 5 installment, whatever interest is there is paid in this year, no? Claim it as a deduction in this year. And 3 installments out of this 30 lakhs is paid in this year. So 30 lakhs divided by 60 will give you 50,000 per month. And likewise, 3 installments of 50,000 is paid in this year to Indian Bank. So 3 into 50 will give you 1,50,000. So this and this. Wait. Tell me. 30 lakhs. This is Indian Bank interest. And this is Andhra Pradesh State Finance Corporation. Sure, sir. This is also interest. This is also interest. This is also interest. This is also payable. This is also payable. Payable for 2 years, payable for 1 year. This was converted into loan, and sir, this was also converted into loans. Very good. So the conversion is not equal to payment. Conversion is not equal to payment. So on conversion, the deduction for 15 lakhs and 30 lakhs will not be allowed. Done, sir? When the conversion happened? Previous year, 24-25. When the conversion happened? Previous year, 24-25, which does not mean that it is paid in 24-25. Now, this amount which got converted into loan has to be repaid in 60 equal installments. 60 equal installments. So, one installment is how much? Therefore, one installment is how much? 15 lakhs divided by 60. And one installment here will be 30 lakhs divided by 60. So, one installment is 25,000 and one installment is 50,000. These 5 installments meaning 1,25,000 paid in previous year 24, 25. This 50,000 three installments, meaning 1,50,000 paid in previous year 24, 25. Getting my point, everyone? What is this? Interest only, which got converted into loan, is now being repaid as loan. So the amount of loan repayment which you are making is nothing but the interest you are paying. Hello. So this is known as, this is equal to interest payment in previous year 24, 25. So this will be allowed as deduction during previous year 24, 25. Copy, paste. Done. Sure, sir. Shall I move ahead? Very good, sir.